Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. This is the weekend market review for the weekend of March 3rd and 4th, 2018. For those of you new to our videos, we take a look at the markets from daily, weekly, and monthly perspectives to give us a better sense of where we've been, where we are, and where we're likely headed in some of the major sectors in the market. And let's take a look at what we've got going on this week. So starting with the 10-year U.S. Treasury on the daily. This one I called for a pullback after seeing multiple signs of divergence here, where price was going higher, momentum was going lower, and sure enough we broke below the middle Bollinger Band and we fell from 2.94 to about 2.78. That's a pretty big move very quickly, but we found support here at the 50 RSI, which is typically what happens, and so far we're bouncing. So the question is, do we break above 2.9? If we do break above 2.9, you want to see that happen this week, and likely means that short-term pullback is over. Looking at the weekly chart for the same index, this kind of goes to show you it kind of pulled back here, but it's still well above that 69 to 70 area on RSI, which is a crucial area that you want to be in if you're if you're long. And so far we're there, and it looks like we've found support around that 2.8 area. And again, you want to see this break above 2.9. If it does, then signs that we're going to push through 3 very soon are increasing. And on the monthly, the 10-year, again, this is an area that 69 is going to prove to be very, very strong resistance, and it coincides with that 3 level. But at the same time, there's positive divergence here, where RSI here today, when we're at 2.9, is much higher than RSI was when we were at 2.98 last time around. So looks to me from a monthly standpoint that this is going to break higher. It's likely going to cause some more market volatility, so stay tuned. But the question is, does it happen right away, or is it still going to be a couple months before it pulls back and then breaks higher? Stay tuned. Gold on the daily. So gold so far has been acting very weak. Gold stocks have been acting very weak, and so if you look right now, we found some support here around that 38 level, which is another crucial area of support. Coincides with this particular area where we bounce from right around that 1238. So that's very important that we bounce here, and so far it was a very strong move. And if we can break back above 50 on the daily RSI, this suggests that this move is now over, and this was a flush out here and likely moving higher. There was some MACD, or a PPO in this case, PPO, positive divergence. If this closed the week, the day above its 50-day moving average, so I want to see some follow-through action this week to confirm that we've indeed bottomed here and likely moving higher. On the weekly chart, I mentioned that it was very possible that we'd pull back to test that middle Bollinger Band around the 1300 level, 1303, and sure enough, the low this week was 1303.60. So we tagged it perfectly, and we rallied basically off the 50 RSI level, and so now with the PPO just above 0, it's very possible to curl back higher here. So you want to take a look. If we have a strong follow through week this week, it's very possible that the gold stocks and gold sector in general is likely bottomed in the short-term pullback. From a monthly basis, as I pointed out, we're in the midst of a crucial breakout of a 5-year downtrend. So that's what you want to see. There's continued momentum being built on the monthly chart, and eventually this is going to break 1380 and 1400, and then we're off to the races. And here's where you want to be doing your due diligence on the dozens of companies that have been killed basically, but they will rebound, and not only rebound, they'll have 100 to 1,000% moves eventually when this bull market is back in full force. The junk daily had a very nice Friday, where it had a nice hammer pattern, closed above the 200 day moving average and above the middle Bollinger Band. Looks like this wants to move higher, so I'm not convinced that the markets are ready to completely roll over, though we've seen some cracks in the framework there over the last couple of weeks. Looking at, and here's another thing I'll point out on the junk bond daily: money flow is moving in a positive direction. That's very, very important after a period of time where there was very little interest in this particular index. On the weekly, we still are having trouble breaking above the 50. So let's see what happens here. If we're below the middle Bollinger Band, and we're finding support at the 50-week moving average. If we can't break the 50 on the RSI, then we're likely headed lower. If we can, then this likely means the next retest is at that 61 level and likely coincides with all-time highs. So very curious to see what happens over here. In my humble opinion, this is the part of the process of a very long market top here in as resembled by the junk bonds. Now, on the monthly basis, we're still in very overbought territory. We're not in extremely overbought territory, and so we might actually break back above the 69 level. But ultimately, I think if we find support here on the middle Bollinger Band, we're likely going to move higher. If we break below that, then this is going to be confirmation that indeed we're moving lower. Now, the PPO suggests that, as I've been pointing out for a while, we've been curling towards a break below zero, and we're finally there. And again, this is just one piece of evidence that suggests that we might be moving lower rather than higher in the long run. Taking a look at light crude oil on the daily oil, it had a little bit of a pullback here to the 58 level. It rallied back to 64, found resistance right precisely at the area that we thought we would, which is the last area where we broke down from, right over here. And so the question is, what do we do here? Now, back at 60, we found support right at the place where we bounced from. Momentum bounced right around here. We found support here. No surprise. Question is, does this support hold and we move higher, or do we roll over here? We will see. Let's take a look at the weekly to see what the evidence suggests. Well, based on the weekly here, it looks like we were not able to recapture the 61 level. We had a kind of a shooting star pattern here on the weekly, and I'm of the opinion, when you look at the PPO here below zero, that oil wants to move lower before ultimately finding support, likely around this 50 area on RSI, possibly as low as this 38 zone. Now looking at the monthly, we're still in this inverse head and shoulders pattern, which I ultimately think will resume to the upside 70, 80 as potential price targets, but in the short run, I think a pullback all the way possibly to as low as 50 or 52 to 53 areas is definitely in the cards. A multi-month pullback to kind of remove some of this overbought condition likely coincides with this RSI pulling back to this 50 level. So I would not go long the oil sector right now, except for specific names. Now, looking at the NASDAQ, we had a very nice rally here on the 50 RSI level, and that suggests that it wants to move higher, bottom line. NASDAQ weekly, it closed basically at that crucial 60-61 level, so I would say that we bounced once again on the middle Bollinger Band, which is very, very important, and likely wants to move higher. I mean, I just think that the overwhelming evidence suggests that every time we have some weakness, it finds support, and I don't see any reason why at this point technically the NASDAQ is breaking down. On a monthly basis, there are some cracks in the framework here. We kind of broke down below this bearish wedge, but we're very overbought, but that's precisely where you want to be from a standpoint of technicals. And while I am seeing some weakness here in the PPOs, I ultimately see us still hovering here for a little bit of time before we ultimately roll over here. And looking at the Russell 2000, Russell found support here precisely at the level where he rallied from last time around. Found resistance precisely at the level where it broke down from, right over here. So RSI is crucial to understanding how I look at the markets and how I think makes most people ought to look at the markets, which is follow momentum. Now, we found support at this 38 level, had a nice hammer pattern. I think there's going to be follow through this week, so stay tuned. Looking at the Russell weekly, though, they're still weak. We're still above the 50 RSI level, so we might hover around and possibly even bounce a little bit more. But ultimately, I think this resolves to the downside longer term. And the Russell monthly, it's still in it's kind of this rounding top pattern, in my opinion, that we still might retest highs So there, in the short run, there might be some bounces back and forth, but ultimately, unless we can retake the 69.70 level of RSI right here, ultimately I think we resolve lower. Again, look at the PPO continuing to make to roll over here. I think that's very, very important. Very few people are talking about that. S&P, same type of pattern, found support at the 38 level, likely bounces for a week or two. Not on the weekly though, it found trouble breaking above the 60, but it found support at the 50. So there's a battle going on clearly. I think it bounces for a little bit here and ultimately breaks lower a little bit longer term. Looking at the monthly, we're still very much overbought, but again, notice how the MACDs are rolling over, the PPO are rolling over, and that. Again, this is a long-term chart and long-term perspective, but ultimately this shows you that there are indeed cracks in the armor here, and that's definitely something you want to see. Look, well, last time we had this in 2004, it was kind of rolling over for a while, rolling over, and then broke below zero, and then boom, we had the crash. So we had that here as well. We're kind of rolling over, and it frankly we started making new highs despite the PPO breaking lower. So this is not a guarantee that things are going to continue breaking down, but it's definitely something to be wary of. The U.S. dollar, well, U.S. dollar daily here is trying to make a bounce, but even as it's making new highs here, the PPO is not confirming this. But at the same time, RSI did make new highs, but it's found resistance at that 61 level, and it's now pulling back, broke below 50 on the daily, and so I think we're going to break below 90 again very soon. RSI weekly. It seems to be struggling, breaking above that 38 level, 38 to 40 level. It's found resistance at this level where it found support before multiple times, and now it looks like it's going to start its process of rolling back over. We'll see. It's going to be interesting to see what happens with the PPO. Does it break above zero and ultimately make a run towards that 92 level, or does it roll back over? And the monthly chart, again, very weak. There's nothing really to say here. It might bounce to the 92.50 level. It's so far found support on the 200-month moving average, but I think ultimately we're rolling back over towards that 80 level before potentially resuming the uptrend back to 120. And the volatility on the daily, this is interesting. I want to just draw something out over here because this is something that I expected to happen. Which is you had this breakout here above this 15 level, and then you pull back right to the breakout point, and then once again we found more volatility, renewed volatility once we broke out of this wedge here. The question is, what happens? Can we find enough strength in the volatility index on the daily to move higher, to retest this, or is this just a bounce and it's going to ultimately break lower? Remains to be seen. You see the PPO is moving in a positive direction, so we might consolidate here for a while, possibly retest this breakout zone, and then ultimately I think it will resume to the upside. So stay tuned there. Now, looking at it from a weekly standpoint, here's again, it's this wedge that broke out to the upside, and now it kind of consolidated here. The 200-week moving average is acting as support, and we're in a period of renewed volatility in the markets. That's without a question. Question is, how high does it go? Well, that's anybody's guess. And on a monthly basis, here's what I'm looking at for a better perspective. Breakout, consolidation, possibly, and I think ultimately will retest this 2008 level at some point around that 90 area. And on the weekly chart, the weekly world index, this is the one that looks the weakest of all, and that's not what you want to see as we look at the market. So the S&P, the Nasdaq, and so on, they look like they're finding some support, but not the weekly stocks. So that's very interesting. We closed the week below the 50 moving average with an ugly candle here, and ultimately I think we might be pushing lower here as we're continuing to break down on the emerging markets. So bottom line is there's a lot of indecision in the markets. In the short run, we might have a little bit of a bounce play, but in the longer term, I think we're creating rounding tops in a lot of these areas. And so of all these charts that we looked at today, the only two that really stand out were gold and interest rates. Both appear ready to move higher sooner rather than later. And guys, if you like these videos, I really appreciate your support. Please follow us on StockTwits and Twitter. And for those of you who haven't checked us out, please check us out on patreon.com/Moniology. That's where you can support our work. We do this for free on your behalf, and we appreciate any donation you can make to the work that we're doing. Thanks, guys, and have yourselves a wonderful week.